So, anyway, just want to thank everybody for joining us today. And first off, I just want to say that I genuinely enjoy what I do. That may be hard for some to believe, but I really do. And as a CPA, I've become very familiar with this certain kind of expression that appears on people's faces when I tell them that I'm a CPA. And you know, that expression it's kind of a mixture of sympathy and repulsion and pain sometimes. And you know, I haven't conducted a formal survey yet, but I'm pretty certain that most people are about as excited to talk taxes with their CPA as they are to have a visit with the dentist. So with that said, the truth of the matter is taxes can actually be very exciting when you learn strategies and you learn the tax law so that you can apply the law to your advantage. The problem that most people have is they're reactionary. The only time they think about taxes is around March or April when they're due, and by then it's too late. The last year is in the past. There's nothing you can do. When you're thinking about it proactively, it can be really fun. So with that said, let's go to the next slide here. As this slide kind of demonstrates, over 70%, what is it, 73.2% of small businesses, which includes independent contractors, are structured as sole proprietors. That actually is okay for some. Depending on the amount of money that you're making, sole proprietorship is great. It's very simple, which is the main reason that most businesses are structured in that way. You can wake up in the morning and say, you know what, I'm a painter, and just because you said it, you have a sole proprietorship now, and you're a painter. And so it takes a little bit more effort to have a different type of structure. But in a lot of cases, the flip side to having that sole proprietorship, and the reason it can be damaging, is it's also by far the most expensive in terms of your tax bill. And we'll demonstrate why later on. But the question becomes kind of why? Why do most independent contractors structure themselves this way if there is, at a certain income level, why they could save money doing something else and they don't? And the answer, I think, is pretty simple. You guys are great at what you do, doing translation and interpretation for the deaf. It's actually amazing. Oh, sidebar. I previously lived in Russia and was very involved with a group that served the deaf community in Russia. And so I worked with them for a long time and picked up enough conversational Russian Sign Language, which is actually very different than American Sign Language. And so I guess I feel I love that group of people so much. And so what you guys do for a living, I think, is phenomenal. And totally unrelated to what we're talking about, but I just had to plug that. Barely remember any of it now. It was a long time ago, but it was one of the best times of my life. So you're great at what you do, but you're not tax experts, and nor should you have to be. That said, you do need to have an advisor that can help you and guide you through this process. Problem is most CPA firms are very expensive. They're not designed to help the one-person company. They charge hourly rates, you know, $200, $250 an hour, whatever the case may be, and it's just not. It doesn't make sense for you. And so because they're not catered to your type of business. So the question becomes, well, what do we do? And that's really kind of what gave birth to our firm, is in the whole economic meltdown that started, you know, back in 2007, 2008, there were a lot of people that were becoming independent contractors, not out of choice, but, you know, they lost their job and they had to find a freelancing gig on the side or something like that. And these people needed guidance, and we saw that, me and some of my partners, we saw that these people were underserved because they didn't have the same access to good advice because it was simply too expensive. And so we decided, you know what, if we can deliver services to this group of people, to independent contractors, in a very focused way, then we can deliver those services very efficiently, because that's all we're going to do. And as a result, we can charge a lower price and pass that along to them, such that, you know, it's a low enough price that you can take advantage of a lot of tax strategies and advice that otherwise would simply be too expensive, and the savings would not justify the cost. So with that said, I want to go into the first example of a strategy that we use pretty extensively over here. And based on the questions that were submitted ahead of time, I know that this is something that a handful of you are also aware of. I want to dispel some myths and also just kind of show you how it works. So here is a screenshot. We're first going to show an example of somebody that's structured as a sole proprietor. So when I say sole proprietor, that could be that you don't have any kind of structure. It could also be that you have an LLC without an S election, because somebody with an LLC, a single member LLC without an S election, is exactly the same as a sole proprietor for tax purposes. So in case that is difficult to see, we're going to go ahead and zoom in on that a little bit, and you'll see that this sole proprietor in this example has $40,000 of income. Why 40? We just kind of picked it out of the air. So line 12 is business income Schedule C. We're going to go ahead and so you can see on line 22, that's their total income. That's it. It's $40,000. On page 2 of the tax return, we can actually see what their total tax bill is that results from that. So sole proprietor, and in this example, it's a single person, no kids, just very simplified. Their total tax is $9,845. Of that, almost $5,700 is actually self-employment taxes. So the large majority of what this person is paying in taxes isn't actually income taxes at all. It's self-employment taxes. And so that's what ends up oftentimes killing people when they are sole proprietors. We're going to go to the next example, which is if that same person was to make an S election, okay? We can talk about how to get there. Well, let's just assume for a moment that this person now has an S corporation that they're operating their business through. The unique thing about having an S corporation is that it puts you in a position where you are now both an owner and an employee of your own business. That's important because as an owner, you can take out dividends. They're more appropriately called distributions, but you can call them dividends too. Those dividends are not subject to self-employment taxes. So that can be a pretty big income tax or a tax shelter. Now, in order to do the strategy, you also have to pay yourself a salary. So in the capacity of an employee, you have to pay yourself a salary, and that has to be a quote-unquote reasonable wage, and that's IRS lingo. Well, in this example, the person is paying themselves a salary of $22,000, and that's showing up on, $18,000, which is showing up on line 7. And the rest of the income they're taking as a dividend, as a distribution. And that's showing up on line 17. And if you read that, you'll actually see that that's from rental real estate, royalties, partnerships, S corporations. And so the total income for this person is still $40,000, no different than the first person, the first example, that was just a sole proprietorship. So now let's take a look at what the resulting taxes are. Here we see that the total taxes are just under $7,000, but the self-employment taxes have dropped down to just around $2,500. So a pretty significant drop, and we can actually compare the two more directly right here. So we'll see on this slide that the bottom example shows the sole proprietor paying about $9,800 in taxes, while the S corporation is paying just shy of $7,000 in taxes. And remember, this isn't, they have changed nothing in what they're doing in their real business. They're providing the same services, billing for the same services. They've just changed the way that they're reporting it to the IRS, and as a result, they have tax savings. And this slide just shows you more specifically the total tax difference between those two examples of just shy of $2,900. So anyway, the argument that we always hear from people is, well, sure, but it costs a lot of money to do that, to have that S corporation strategy. My accountant told me it was going to cost me thousands and thousands of dollars. And you know what? When people tell me that, I say that's absolutely true. If you were working with another CPA firm, it would cost you thousands and thousands of dollars. But we're able to do it in a pretty cost-effective manner. It starts at about $150 per month. So here's how we deliver those services. First, you're assigned a bookkeeper, and that bookkeeper helps keep everything on track. When you have an S corporation, the regulatory requirements are more stringent. The bookkeeping has to be more rigid. And so we find that you're busy, you don't want to be a bookkeeper. It's just as well if we can assign you one and make sure that we stay on top of that for you. And they will. You're also assigned a CPA who oversees the implementation of any of your strategies, that has regular checkups with you throughout the year, so that you're not just talking to them at the end of the year to file the taxes when it's too late. And so in addition to kind of overseeing all that, they look for opportunities to implement new strategies that can also save you money, with obviously the goal of helping you either increase your refund or decrease the amount that you owe, or whatever the case may be. But this CPA is also going to be the same person that files your business taxes, your payroll taxes, your personal tax return, takes care of all of it. So the fee that you pay us is all inclusive, no other hidden fees. And this slide just kind of shows you what's involved with that. We do serve clients in every state in the country, and that's one strategy. Depending on how much money your business is making, it can make a lot of sense to do that. So before I open it up for any other questions, I just wanted to address some of the questions that had been submitted ahead of time, and hopefully I'm able to hit on most of them. So the first one is, other than the home office deduction, are there any tax strategies that can work to our advantage when combined with other sources of income, like rental income or employment income? That's a great question. You guys are, as independent contractors, you have one of the most flexible arrangements in order to use these kinds of strategies. So yes, you actually have a lot of things you can do. In terms of rental income, one thing that we see pretty often is if you do own, let's say, some rental properties, it's pretty common for those rental properties to generate tax losses. And a lot of times those are limited. You're not able to take advantage of all of them. And it's called a passive activity loss limitation, called PALS. And with an independent contractor business like this, you can actually pass some of the income off to your spouse if you're married. For them, it's treated as passive income, and you can net that against your rental real estate losses. So I could get really in the weeds on this one, but yeah, there's some really cool things you can do with rental real estate. In terms of other strategies, if you have children, let's say you have a 10-year-old in the house, well, that's basically like a little 10-year-old, tax bracket running around your house that isn't being used. And so something you can do is, depending on your income levels and what tax bracket you're in, you can actually shift income over to one of your kids, and up to a certain dollar amount, it's the tax bracket is 0. So you're taking it out of your tax bracket and putting it into theirs, 0, and you don't even have to give them the money. There are some requirements about how that money can be spent, but it could be used for family vacations, it can be used for all kinds of things. So you don't have to give it to the child, is my point. And there's things we can do with management companies that are getting probably a little bit too complex for the conversation today, but basically you can shift income from even an S corporation into a regular C corporation, and up to a certain dollar amount it can be taxed at a lower bracket. That strategy typically only makes sense at pretty high income levels, $200,000, $250,000, something like that. So moving on to the next question here, what's the best tax strategy when working as an independent contractor but needing to show a certain income level in order to qualify for a home? So this is actually a really great question, and it's a problem that a lot of independent contractors run into, particularly if you are structured as a sole proprietorship. Because normally banks, if they see business income, they're going to require at least 2 years of history, of consistent history, to depend on that as a source of income to fund a loan. The underwriters at banks don't understand business income. They feel much more comfortable with W-2 income because in their mind it's more consistent, it's safer. I mean, of course nowadays we know that being an employee is no safer than anything else, but that's still the way that banking laws are written. So one thing you can do is if you actually have this SCorp strategy, you can pay yourself the income as a salary, and it shows up as W-2 income. And we've helped tons of clients convert their business income into W-2 income, which all of a sudden the banks don't need to see 2 years of history. They see that this is a paycheck coming in regularly for a month or so, and they go, okay, and they rubber stamp you. It's ridiculous, but it's the case. So it's definitely something to look into if you're trying to qualify for a home loan. This question always comes up. Can TurboTax perform just as well as a, let's see here. Actually, there was a question. How do I get that? Okay. All right, so Will has a question here. If you do an S-Corp, would you have to file that under an EIN rather than a Social Security number? And the answer is yes. So when you have an S-Corporation, I've mentioned that there are some additional regulatory requirements. One is that you have to get an EIN. That's something we do for our clients all the time, not difficult to do. And then you want to open up a business banking account, a checking account, under that EIN. And you have to fill out a Form W-9 so that when you're paid, it's paid to that EIN instead of to your Social Security number. Because what you want to make sure happen is that at the end of the year, when that income is reported, it's reported to the IRS under that EIN instead of your social. So, but yeah, that's a great question. And if anybody else has any other questions, feel free to type them in the screen there. And otherwise, I'm just going to continue to go through the questions that were asked here. So somebody asked here, can TurboTax perform just as well as a tax preparer? I mean, I'm going to be biased here, right? But the truth is, yes, TurboTax can be just as effective as a tax preparer if you're just a W-2 employee. If you get more complex than that, honestly, I'm going to have to recommend that you work with a professional, just because it's been my experience that TurboTax is, the problem is you don't know what you don't know. And TurboTax really relies on you knowing the law. You know, just this year there was a new election that came out relative to businesses, and it was a really big deal. And you have to make this special election. Well, I know that TurboTax doesn't have that built into the software, and so there are things like that that come up all the time. Let's see here. Another question came through. All right, so we've got a question here from Let's see here. Are SCorp dividends taxed in any way as income? Yes. So when we talk about dividends from an S corporation, it's not the same as a dividend from a C corporation. So if you own a public stock and it pays a dividend, if you've owned it for 61 days and there's some other special requirements, there are special dividend rates, and you get to pay between 15 to 23% depending on your income tax bracket. Well, when it comes to S corporation dividends, it's taxed. It's not subject to self-employment taxes, but it is still subject to income taxes. So it's taxed the exact same way as any other type of income. It's just that we're shielding it from self-employment taxes. So let's see here. Can a person form an S-corp any time of the year and start using that EIN partway through? The answer is yes, you can, but it's not ideal. So what would end up happening in that situation is, because you can form an S corporation anytime, not a big deal. But if you don't get an EIN and start using that EIN with the S corp, at the end of the year you're going to get two 1099s. You're going to get a 1099 in your Social Security number, and you're going to get one in the S corporation in their name. Well, everything that's in your name that's under your Social Security number, that's going to be subject to, fully subject to self-employment taxes and income taxes. Anything that's under the EIN, we can do some of that shielding work that we talked about. So, you can do it whenever you want, but it's definitely a situation of the sooner that you pull the trigger, the sooner you start generating tax savings. And let's see here. Okay. So, somebody asked here, is there an efficient method for tracking income and expenses deductions throughout the year to avoid the pre-April, October 15th panic, of which I'm all too familiar? So, yes, there are some tools out there. If this is something that you're doing on your own, you can actually hook up mint.com to a business account. So everybody listening to this, whether or not you have an S corporation or your sole proprietorship, I highly recommend that you set up a separate bank account for your business. And you should only have business transactions going on in there. There's a couple of reasons. It makes it easier to stay organized, because if you run everything through the same account as your personal account, then at the end of the year, it becomes very difficult. If you haven't done your bookkeeping and you have to remember something that happened 12 months ago, whether this was personal or for business, that's nearly impossible. And the IRS knows that, by the way, which is why sole proprietorships are audited almost 4 times more than S corporations. So, another kind of downside to having the sole proprietorship is that you are audited much, much more frequently. So there's Mint. There are some other free tools. There's actually some apps that our clients find and show us that we kind of keep track of, that they found to be handy to keep track of things like their mileage and things. And we'd have to send that out to you guys. I don't remember the name of it off the top of my head. Another question that came in here is, what additional paperwork is required as an S corp? So this is it. The answer is it depends. So an S corporation can be an LLC for legal purposes. So you can take an LLC and you can make it into an S corporation. You can also take a regular corporation and make that into an S corporation. And so the question of what additional paperwork is required actually has a lot more to do with whether it's an LLC or a corporation than whether it's an S corp. Because the additional paperwork that's going to be required comes from the state, and the state is going to base the additional filings on whether it's an LLC or a corporation, which is typically one of the many reasons why we recommend that if you're going to do this, that you start out as an LLC and then make an S election, because typically an LLC is going to have less paperwork You know, like for example, here in the state of Arizona, you can file for an LLC, and it's perpetual, and you don't have any additional fees, and that just kind of goes on in perpetuity. So it's very, very simple, whereas here a corporation has to file their bylaws, they have annual reports, there has to be a shareholders meeting, which is kind of funny when it's one person. Yeah, so it's definitely something to consider. There's also, in some states, it's very advantageous to have an LLC because, for example, the state of New York, if you have a corporation that you turn into an S corporation, there are certain jurisdictions that won't accept that election, and you're going to be taxed at much higher rates than if you were an LLC. Same is true in New Jersey and in some parts of Pennsylvania. You see it a lot in the East Coast. All right, go back to the questions that I have here. So, you know, there's a handful of questions just about how do I become an LLC. We help our clients become, you know, form LLCs all the time. We're actually affiliated with a law firm that can do it for you. We help you fill out the paperwork. We review it as your CPA, make sure, all right, we've got all our, you know, I's dotted, T's crossed, that from a tax standpoint, we like the way this is being formed. Then we send it to the attorney who looks at it from a legal standpoint and make sure that for that particular jurisdiction, that's a good formation. And so the fee for that is $229, $39, and plus whatever the state charges for the state filing fee. And so we can walk you through that. If something you were trying to do on your own, well, the amount that we charge is the exact same as LegalZoom. But if you were going to do it on your own, you'd want to look up the Secretary of State where you're at, and they would be able to help you with those documents. Let's see here. Sorry, I'm just looking through questions here. All right. We've got a question here. It's a really good one. How risky is the home office deduction? And with, you know, parenthetically, they're saying, I've heard it's an IRS red flag. We hear this all the time. It's not a red flag. If anything, it's a yellow flag, and I'll tell you why. It's a completely legitimate deduction. The problem is taxpayers abuse it, and they don't know what the law is. They just assume they can deduct everything related to their house, and they go crazy. The IRS knows that, and so they have statistics and they have tools to be able to see what's reasonable. And so when a home office deduction is coming through, they can, you know, do certain tests, analytical tests, to see if that's something that should be reviewed. But that said, there's an IRS form for the home office deduction. It is in the tax code. It's there because it's a very legitimate way to reduce your taxes, and I would encourage anybody whose facts and circumstances align with it properly to take advantage of it. One more plug for the Escort strategy is that if you're a sole proprietor and you take the home office deduction, there's actually a separate form that you file, and it says on the top, home office deduction, and it makes it very easy for the IRS to determine who is using that. When you have an S corporation, it's done in a very different way. It's treated as an employee reimbursement. So there's no separate filing. It just shows up as a rent expense. So as far as the IRS can tell, it's you renting, you know, it's your S corporation renting space somewhere, and they don't even know where that is. So they don't have the same ability to perform the same kinds of analytical tests on an S corporation's home office deduction that they would on a sole proprietorship. And that probably contributes, or it's a contributing factor why S corps are audited so much less often than sole proprietorship. You know, somebody asked here, is it better to make quarterly tax payments rather than a lump sum when filing at the end of the year? Yes. I don't even think yes, you're required to make quarterly tax payments, and if you don't, then you can accrue extra interest and penalties as a result. There are a lot of questions here that are really good that are unfortunately very specific. I can tell they're very specific to somebody's situation, and I would highly recommend that anybody listening to this that has questions that are very fact pattern specific to them, that they reach out to us. We do have our phone number and our email on the website here, and so we would encourage you. There'll be no charge. We can do those types of consultations. No big deal. Of course, we would love to have you as a client, and we'll tell you right up front after you tell us, about your situation, whether or not we're able to do things in a way that will actually save you money. We have no interest in bringing on clients who we can't help, and so so just give us a call. But that said, maybe we should just go ahead and open up the phone to see if there are any other questions. Can you do that?
Mm-hmm.
Okay. So before, I think the mics are open now, but before I do that, there's one additional question that I just want to address. One of the questions was a pretty in-depth analysis on when it makes sense to have, when does it make sense to have an S corporation? When do the savings of that outweigh the hassle and the cost? And somebody had been told that it was $200,000. And we, as a rule of thumb, we usually say $30,000, because $30,000 is basically the break-even point where the cost, the savings that we help you generate will more than offset the cost. And that's a very good rule of thumb. Sometimes we have to look at the different states because there are state tax implications to look at as well, but 30,000 is a very good rule of thumb. And so with that, are there any other questions that didn't get addressed or that you guys would like to ask? All right. Let's see.
This is Kate. There are quite a few questions over in the chat that I think that I think are really good questions. So one was from Jaron. I'm scrolling back up to about 6:53 p.m. My time, I guess. But it says, what taxes does an S-corp have to pay that a sole proprietorship doesn't have to pay? And then there are a few questions after that I think.
Oh, I must have missed that. Just a moment. Let me try and find that. Oh, yeah, there's a whole host of comments here that I didn't see. Oh, okay. What taxes does an S-corp have to pay that a sole proprietorship doesn't have to pay? There is one type of tax, and that is unemployment insurance. So when you have an S corporation, because you're required to process payroll, you have to set up actual payroll, like you would any company that you worked at that paid you W-2 income. You have to set up those accounts with your state. And so one of the taxes that you have to pay is unemployment insurance. Fortunately, that is a tax that's capped in every single state, and it's usually not a whole lot of money. And there's some real benefits actually to paying that tax as well. Something that a lot of our clients, particularly in the oil field industry, that have had to take advantage of lately, is when you're paying yourself a salary and you're paying unemployment insurance in the state, if things take a turn for the worse and you have to lay yourself off from your own company, you can actually collect unemployment insurance. That may seem, and that's not something I want anybody to go off and do without consulting with a professional first. But if your fact pattern is good, then that's definitely a strategy that a lot of people have taken advantage of. So, the unemployment insurance tax shouldn't be much more than a few $100s, depending on the state that you're in. But yeah, that is a tax that an S-corp would have to pay that a sole proprietorship would not. Aside from that, nothing. So let's see here. Next question. Sounds like a lot of benefits with the SCorp. Are there reasons not to form an SCorp? Absolutely. There's costs involved. So, like I said, if you're not making, if your business isn't at the $30,000 point yet, I would probably hold off. You may want to just form an LLC for legal liability protection and have that kind of in your back pocket. The nice thing is that you can actually do what's called a retroactive selection. So the IRS in recent years, actually very recently, has put out some procedures, what they call revenue procedures, that allow us to do a retroactive selection. What that means is if you had an LLC and you formed it, let's say today, and you don't know yet though if you want to be an SCorp, because you don't know if you're going to hit that $30,000 mark yet. You could wait until the end of 2015, and if you're there, you can actually file an S-election that's retroactive to today. There's certain things, if that's your plan, you're going to want to make sure and put certain things in place up front to make sure your fact pattern aligns with that, but that's something that a lot of people do. So cost is the primary reason. If you're not making enough, then the costs involved would not justify it. And if your ultimate goal is simplicity and you really don't care about saving money, then I would say be a sole proprietor, because it's simple. You don't have to process payroll. The bookkeeping requirements aren't quite as stringent, and there's not as much paperwork. So let's see here. Do we do the state tax returns as well as the federal? Yes. Yeah. We take care of both. So, which frankly, these days, state tax returns are a whole lot worse than the federal return, if you're asking me. But doesn't the home office deduction affect your capital gains exclusion when you sell your house? Yes and no. It does if you're a sole proprietor. So if you're a sole proprietor, you're actually depreciating your house, which means when you sell it, you have to what's called recapture that depreciation, and that's going to trigger some gain. But if you have an S corporation, you're not actually depreciating your house. Your S corp is just renting it from you, and so there's no depreciation, there's no recapture. So, but great question. And if that doesn't make sense to anybody, I'd be happy to discuss it in more detail as well. Health savings accounts. Health savings accounts are great. You can have them with, and I guess I didn't bring that up because it's not a strategy that's specific to any of these structures. You can have a health savings account, and it works a lot like an IRA. The difference is that while with an IRA you can't take it out until you're 59 and a half, with an HSA, a health savings account, you can take it out whenever you have, quote unquote, qualified health care expenses. And so it's definitely something that a lot of our clients take advantage of. In addition to that, one of the really cool things that you can do is if you have, so if you're a sole proprietor, I would recommend you have a SEP IRA, SEP IRA, and it allows you to put away 25% of the business income, whatever is generated, which is great. If you have an S corporation, I would highly recommend a solo 401k, because with a solo 401k, you're able to put away 25% plus there's an employee contribution as well. So as an employee, you can contribute, I want to say it's $18,000 this year. And the company, your own S corporation, can also make a match up to 25%. So the limits actually go all the way up to $53,000. Pretty great for people who want to take advantage of that. A mortgage broker told me that forming an LLC S corp is the same as being an IC as for qualifying for a loan mortgage. They would still want 2 years of increasing income under the LLC. Is he wrong? No, he's not wrong. every single bank has their own underwriting standards, and they get to write their own rules. So what you see from a community bank is going to be very, very different from a national bank or from a credit union, and it makes a big difference. So we have clients who shop with different banks and say, hey, look, they don't point out the fact that they have this SCorp strategy, but they just say, hey, look, here's what I'm doing, and can I qualify? And with some banks, it goes through their underwriting just fine, and for other banks, it won't. So he's probably absolutely correct for his bank. The question, pointing out $30,000 when I've been saying it, what exactly do I mean by that? $30,000 AGI. Yes, that's exactly what I'm talking about. So thank you for pointing that out. Will your company do the payroll processing involved with the Escort? Yes. So we process the payroll. We take care of the tax filings, the tax payments. Your involvement in that is primarily signing some papers and then just making sure that the money exists in the business account to process that payroll. So we take care of that for you. Like I said, we're really trying to deliver a turnkey solution that makes this as simple as possible, so that it's not a hassle, but you're also saving money. It works out really well for a lot of people. Another question here, if $30,000 is the cutoff for an S-Corp, is there an upper limit to where an S-Corp becomes less beneficial when compared to a different structure? No. No, there is no upper limit, but when you get into higher limits, you start adding in additional structures. So it's one of those cases where the more money you make, the more entities start to appear in your structure, or rather, the more things you can do to save taxes. So if you got over a certain threshold, we'd probably add a C corporation, and actually a husband and spouse, or rather, I guess nowadays you can have two spouses can each have a C corporation. There's some really cool things that we can do with that, but you have to be making a certain amount of money to justify that. We can also do things with trusts, but you really don't bring those in again until you're at a higher income level. And if anyone here wants to talk about that, be happy to do so, but probably that's more of a one-on-one conversation. And all right, I think that is all the questions here in the chat box. If there are any other questions that I didn't address or that are unclear, certainly ask. But I think I'm going to turn the time back over to Dorina. So, are there any other questions that you guys would like to get out there? I'd be happy to answer them.
This is Kate again. I had a quick question. I don't want to cut anyone else off, but that $30,000 mark, I could be wrong about this, but I think a lot of transcribers and interpreters are piecing together both 1099 and W-2 income. I remember before my current position, I was attaching multiple W-Ts and 10 to 15 W-9s after the end of a year. So for those people who are working as employees at some institutions, would it make sense for them to try to renegotiate and no longer work as employees and instead work as independent contractors so that they could
benefit from the stuff?
I'm assuming you want that $30,000 to be independent contractor income, not W-2 income. So you raised two issues, two really good points, and I should have made this more clear, I think. When I say $30,000 of AGI, that's $30,000 of pure independent contractor income. So if that is piecemeal W-2 and business income and rental real estate, then really we'd want to zero in on the independent contractor income. So thank you for pointing that out. And then we have clients all the time that come to us and say, hey, look, I've been offered, I'm a W-2 employee, but my employer is saying that I can be 1099 if I want. And there are more considerations that go into that than just taxes, of course.
Because if you're getting health insurance through that employer, if you're getting other, non-taxed benefits, I certainly want you to take those kinds of things into consideration as well. But if you're not getting those kinds of perks, and they're willing to, a lot of times, most times I would say, employers are willing to even pay you a little bit more as an independent contractor than they do as an employee. And if that can get you over that $30,000 mark, we have people that do that all the time. And it makes a great deal of sense because we can actually put you in a position to pay less in, significantly less in taxes as an independent contractor than you would as an employee. If you think about the equation for how taxes are calculated, for a W-2 employee, it's income and then taxed, and whatever is left over, that's yours to spend. With a business, you have income, then you have deductions, which is then taxed. So the taxing comes after those expenses. And for most of you, whether or not you realize it, there are a lot of deductions that you can take advantage of with your business. So I wouldn't just up and start renegotiating that, but you might want to reach out to us and talk to us about your situation. But it's certainly something to consider. And if you're not at that $30,000 limit, don't worry about it. I'm sure everybody on the call is working towards growing their businesses, and once you get to that point, then let's talk. Does that hopefully answer your question?
That answered my question for sure. Yeah, I think a lot of people are W-2, but they're not getting those benefits, so it would be kind of a no-brainer for them. But.
Right. Yeah. Let's see here. And then we've got another question here. All right. Must one go through an organization such as yours to start an S-Corp? Can one do it on its own? For those of us earning around $30K, $150 a month isn't insignificant. Absolutely. So you could, definitely. There are some nuances to doing it on your own that you just have to be aware of. It's the way that you deduct certain things is not the same as with a sole proprietorship because of this dual nature of being an employee and an owner. And the most significant areas to that are related to your vehicle. If you ever use your vehicle for the business, your home office deduction is very different. And the way that you do payroll and the distributions, the dividends, that's pretty significant as well. That's why we know that $150 per month isn't insignificant. You have to remember, too, though, that that's actually a deductible expense. So it doesn't really cost you $150. So if you multiply that out and you say $1,800, well, there's a deduction there. So I'm actually out maybe, say, $1,400 in real cash terms. And so then you go, all right, well, if I'm saving, let's say, $3,000 in taxes and it's costing me $1,400 for the strategy, sure, that makes a great deal of sense. But that's why, below that threshold, we wouldn't recommend it. But yeah, you can do it on your own. I will say that we do have lots of people that come to us who have tried to do it on their own and just kind of get overwhelmed. So, all right. Are there any other questions? These have been really, really good. And I'm a nerd. I love talking about this stuff. I'll talk about it all day long. So if there's anybody that wants to have more of a one-on-one, then reach out to us. The staff here are also happy to answer any of your questions. But I think we're going to wrap it up here. So again, I just want to thank all of you for listening to this presentation today. And hopefully you've learned something. There are definitely strategies that you can take advantage of that aren't just this Escort strategy, and I'm, if you've got any crazy ideas, send them my way. We'll bat them back and forth. But other than that, you guys have a great evening. Okay. Bye bye.
Thank you so much.